Hey, it's Tax Scripts time from TaxMama.com. Today, TaxMama hears from Matt in the Tax Scripts forum, who has the right idea. He says, I have started a side business doing yard work. I'm trying to determine the best way to save to pay my taxes. I have a checking account that is just for the side business, and I deposit all the money I'm paid for yard work directly into this account. I also use only this account to pay for fuels, repairs, equipment, and so forth. I need to use some money from my business for personal expenses, so I plan to write a check to myself from the business checking account, then deposit that into my personal checking. I also plan to take 25% of the check I write myself and put it in a savings account that's just for my taxes. Should I be doing this, or should I have to set aside 25% of everything I deposit into the business checking account in a savings account for taxes? Well, Matt, good for you. You're making an excellent start. Let me briefly explain the overall concept of tax on your business income. The taxes will be on the overall profits from your business. It won't just be on the money you draw out. Your taxes will be based on the difference between the income you receive and all the expenses, not just things you write checks to pay directly from your business. For instance, you may be able to depreciate your vehicle, write off your auto insurance, and other expenses for your vehicle that were paid from your personal account, perhaps even earlier in the year. Or you may use the mileage rate instead. Sometimes that comes out much higher. In 2001, it is 51 cents a mile for the first 6 months and 55.5 cents a mile for the last 6 months. What kinds of taxes should you set aside money for? Well, you have self-employment taxes, and normally those are 15.3% of your profits, even when you don't have income taxes. This year, though, they should be 2% less, so about 15.3%. Number 2, you have federal taxes. Those will be at 15 to 25% based on your overall income from your job and the side business. That's your federal tax bracket. And then 3, you're going to have state taxes, which are also based on your overall income. So you see, the 25% you're setting aside is probably too low since you have income from a job to push up your tax bracket. You probably need to set aside about 31% to 35%, unless you're in a 15% tax bracket, in which case 21 to 25% will be just fine. So if you're keeping track of your income and expenses and tossing in the mileage deduction instead of actual expenses, you'll get a good idea of your net profit. There's a simple accounting system you might want to try out. It's called Outright.com, and it's designed specifically for a business like yours. And yes, setting the money aside in a savings account is a good habit. You'll need to make quarterly estimated tax payments, and if you set up an EFTPS account, Electronic Federal Tax Payment System account, with IRS Now, and a similar account with your state if they have one, you'll be able to send the money directly from your checking or savings account with no fees, and you'll have proof of your payments and be able to print out a summary for the year when you need it. Unfortunately, this is just a start. There's more to the administration end of running a business, so please pick up a copy of Small Business Taxes Made Easy to learn other things you need to know and ways to cut your tax hit as well. Is this more than you wanted to know? I'm sorry. And remember, you can find answers to all kinds of questions about saving up to pay your business taxes and other tax issues free. Where? Where else? At TaxMama.com.